Hello everyone, good evening, it's Calvin here. I got a request to look up stock, I believe, from Got My Horns Up from YouTube. I want to take a look at ELLI. Looks like an alternative play to perhaps Apple tech stock. Right now, what I'm looking at generally, it's had a nice run already. It's in a nice tight consolidation range, holding the 382 retrace. When stocks make a nice move up and hold the upper range of it, especially a 382 retrace, usually means it's healthy and it's just consolidating in the upper portion of the move. So this is just consolidation right here. Nothing wrong with it. You still have an uptrend. You're still above the 200-day moving average. You are coming into support right here with these pivot lows with the 200 moving average, which is rising. It would be a lot stronger. We did kind of already come into it here, so it kind of weakens the 200 slightly, but you have a double bottom here. So anywhere in this vicinity is strong support all the way down to 20 bucks. Now, if you can make a case that this was the previous resistance, right? Banging its head on it, broke out above it. You know that when you get a big green bar, you know that's a breakout on higher volume. That's a breakout. Now we could be retesting it. So if it kind of slowly makes its way down here with the 200, you generally don't want to see it close below the 200. So if it closes below the 200 and confirms with another day below the previous day, so if a candle is right here, closes, and the next day you get a follow through, generally it's a confirmed level. So that way you know the 200 will now be resistance. So that could be your first sign if the stock is still okay. If it holds generally in this level, to me, if it doesn't hold, you're generally gonna see some choppiness, make a bearish type pattern on the 200, and then it will break. But generally, this is a spot for support. Once again, with this pivot low. It's also strength below it with the 382 retrace. Like I said, once again, it's in this little range right here. What kind of scares me is on the smaller time frame. You also see on a daily chart, you can make a case that's just a head and shoulder here. Let me look at the hour chart. You can see it more clearly. And the measure move does take you lower than where the support's at. It generally takes you around the $19 level. And so you have to be aware of that. You just have to be aware of all these patterns. You have to look at every time frame. You have to look at every case scenario. So I already measured this move out. If it is a head and shoulder, it does take you way down here, which is past these levels of support. So if it does trending down here and you don't get a bounce, you can start getting a bearish pattern. It does perhaps indicate that there are lower prices in the cards. But once again, right now, the 200 is support. Okay, so generally, if you want to take a shot at it, if you want to play the 200, I'm not sure if you're just trying to swing it or if you're trying to just accumulate it. If you're swinging it, you could play the 200 with generally in this level, 121.30 ish with this double bottom. You could play it right there. But if it does close below, just have to be very cautious and see if you get a secondary close below the low of the first candle. Now you could use that as your stop out, and you perhaps just look at the next level because the measure move does take you a little bit further down. I was looking at the weekly chart. The weekly chart, you have the 50-week moving average right below. So this is going to be a lot of strong support here. And this is that big green weekly candle right here, weekly igniting bar if you want to call it that. The breakout areas right here. So I'm going to say this is in this general vicinity. You are into very, very strong support. Okay. All right. So you're still in this consolidation pattern. So anywhere from 20 bucks generally to where it is now. There's 21.86 to roughly $20. In that range, that's going to be some good support. There's just so many factors. You got 382 retrace, you have the 50-week moving average, you have these pivots, you have the 200-day moving average, which has never been touched since this entire up move. Okay, so you know that's going to be a strong support. Okay, so that's your level there to watch. On the monthly chart, you can see it more clearly. It's just off this up move, just consolidating in the upper range. This is, you can kind of say this is a bullish flag-ish pattern on the monthly chart and holding up nicely. The only thing I don't like is these volume candles are kind of big. Consolidation, you like to see smaller, lower volume consolidation, but nonetheless, the chart is the chart, and it's still saying this is a kind of a bullish consolidation pattern. If this pattern breaks, these are your levels to the downside. Let me go back to the daily chart. I pretty much grabbed the fib from the all-time low to the all-time highs, and these are your levels of reference. Okay, so let me go to daily chart and see that these fibs just line up perfectly with very important support and resistance. It's actually pretty incredible. Okay, if the 382 breaks, your next level is going to be the 50% retrace, which is this breakout area. See how I kind of tested it right here? every time it breaks out, it likes to retest that level. So it broke out here, and you get a nice candle kind of retest this level. So that's going to be support at the 50% retrace. If that breaks, next level, major level, will be your 618 retrace, which is the strongest fib of them all. And sure enough, you have, and ultimately this is the measured move of the breakdown too. If this was an M top, see how all these measured moves line up with very important support and resistance. So let's say this is an M top breaks or double top. You take the measured move, it actually takes you in this vicinity with the 618, which is also a gap area. Let me line it up, zoom it in. So I love when fibs line up with really great support and resistance, right? So there's a 618, 61.8 Fibonacci retrace. It's kind of coincides with the low of this big green bar, and just below you have the gap fill, which has never been filled. So generally, if you're a long-term, if you're looking to accumulate the stock and hold it long-term, 1285 and 1372, that's your general spot if this pattern fails. Okay, but once again, things change day by day. The pattern are always changing, so you always have to just be aware of that, and you just have to monitor it each day as it goes, because every candle gives you another hint, gives you another piece of the puzzle. In essence, okay. So I think this, to sum it up, I think in the short term, near term, this is just support level. So this is generally support 1, support 2, and support 3. Okay, guys. I hope that answered your question. Feel free, guys, to put some ticker symbols in the comment box. I would love to go over them. Try me out. And I hope you have a great one. Okay. Have a good night. I'll talk to you later.